Start. Good morning, everyone. Today we are going to study the chapter. It is nothing but valuation of goodwill and shares from Advanced Accountancy, semester 3. Goodwill. Goodwill is nothing but it is an intangible asset and it is a valuable asset if the business concerned is profitable, but if the business is suffering from continuous losses, it is valueless. It is a reputation and connection of a business. And under goodwill is nothing but actually it is a good reputation of the business. Under goodwill, we are going to study about definition. According to Log Magneton, it is a benefit and advantage of the good name, reputation, and the connection of the business. It is an attractive force which brings in customers. Whenever we are going to study the goodwill, I can give you a best example that any person who is running the business in a very profitable way, at a time he has been expired, so his children has taken over that particular business. Even though when the children has taken their particular business, there is a possibility that the goodwill reputation will be the same. So automatically the name has not changed and the person has changed, but the customers will be the same. Because of his reputation and connection of the business only, he'll get the good names towards his customers. What are the main features of goodwill? The first main feature of goodwill is it always fluctuates from time to time because due to internal as well as external factors. And it is highly subjective and differs from value to valuer, and it is realizable only if the business is disposed. Suppose whenever the business is going to be disposed from one person to another person, automatically the main feature of the goodwill will be realizable. And what it is the present value of the firm anticipated excess earning. They will be always providing the excess earning towards the goodwill because of its reputation. What is the main need for valuation of the goodwill? Because the need for the valuation of the goodwill depending upon the form of business organization, which type of business you are starting. Maybe it is a sole trader, or it may be the partnership firm, or it may be the joint stock company too. Because always the business, whenever we are doing the business, there is a possibility that in case of sole proprietor, it is usually valued at the time of selling of the goods. Whatever we are selling of the goods, the main necessity will arise only in these cases when the goodwill is going to be considered when you are preparing the partnership accounts. In that, when the new partner is admitted, when the partner retires or dies, when there is a profit sharing ratio among the partners, or when the firm sells its business to a company. And in case of joint stock company also, there is a possibility that the necessity occurs only in the following cases. What are the following cases? When we are transferring one company to another company, or when we are amalgamating the companies, two or more companies which are in losses, we are amalgamating into one particular company, or one company will take over the business by the another company, or when government take over the business. Because sometimes there are so many autonomous bodies are there, privatizations they want to make it. At that time, there is a possibility that they want to take over that particular business. And the next point we are coming under the goodwill is nothing but the factors. The factors which are affecting the value of the goodwill is, first, the most important thing when we are doing the business, the first and the foremost important thing is your capital. Capital requirement plays a very important role because every maximum of the people without a capital, it will not affect towards your goodwill. Without a capital, you can't do the business also. For that particular thing, capital requirement is very important. Next is, there is a possibility of transfer of goodwill. When one person is expired, there is a possibility that it may be get transferred to his son. Or the third point is under profits which are expected to be earned by the concern. Because one particular concern, there are three types of concerns we are going to be taken into consideration. One is sole proprietor, the second one is partnership, and the third one is joint stock company. From these three concerns, there is a possibility that we may earn the profit. Up till now, we have been gone for the three things. The first one is, we got it about introduction. Next is your definition. And the third one is your features. Fourth one is your need. What is the need of the valuation of goodwill in the business? And the next part is the factors. After considering all these points into the account, there is a possibility that every chapter will be dealing with some of the methods. So in this, what are the methods? The methods of valuing goodwill is, there are 4 methods while valuing the goodwill. The first one is average profit method. Second one is super profit method. Third one is capitalization method. And the fourth one is annuity method. But when we are going to be considered in this chapter, we are dealing with only 3 methods, but we are not doing with annuity method. But yet the 3 methods are very important, because all the problems are going to be studied in this chapter are related to these 3 methods only, but not to the 4th method. So now we are going to start the first method, that is nothing but average profit method. Under this method, average profit method, this method easily we can understand, because total profits. Suppose take an example, the profits are given the profits are given up and down. When the profits are given, first year we got 10,000, second year 30,000, next 50,000, next again 10,000. So at that time only this method can be applied. That is average profit method. I have been not clearly mentioned to you in that, but here average profit method have been classified again into 2 types. First one is profit method, and the second one is weighted average profit method. Under average profit method, the profits are up and down. The profits are up and down. They are not at a one particular point. They are up and down. So it will be very easy to calculate average profit method. Under this method, we have to take all the profits of how many years he has given, maybe for 5 years or 4 years or 3 years. Average profit is equal to total profits divided by number of years. After getting you the answer, because we are doing the goodwill chapter, so at that time goodwill has to be related with these chapters. So goodwill is equal to what, ma? It is nothing but average profit into number of years purchased. Average profit into number of years purchased. Under this only we are going to study the second method. Under this we are going to study the second method. It is under average profit method. First one is profit method. Second one is weighted average profit method. In that only one important point is the profits are continuously increasing. When the profits are continuously increasing, I have been not mentioned here, but when the profits are continuously increasing, we have to use average profit method. Under average profit method, weighted average profit method, under weighted average profit is nothing but they are being classified into different columns. Okay, when I am telling the problem at that time, I'll explain you, but simply I am giving the rough information of weighted average profit method. First we have been classified into 4 columns. First column is year, second column is profit, and the third column is weight, and the last column is product. Column year is nothing but 1, profits are 2, and third one is your weights, and the fourth one is your product, 2 into 3. Then after that, we have to calculate the formula. Same method you have to use again here. Weighted average profit is equal to total profit divided by number of weights. Total profit, instead of total profit, I should write total product. Total product divided by number of weights. So we are getting one answer. Again, you have to do the same old formula. Goodwill is equal to average profit into weighted average profit into number of years purchased. Next one. Second method we are going to study is that is super profit method. Super profit method, under this method we are going to be classified into 6 steps. Every step is differ from other, because if you have been doing the first step, automatically the 6th step you'll get the answer correct. If there is a problem in the first step, means automatically it will not tally up till the 6 steps. The first step is ascertain capital employed. Capital employed is what up till now we have been studying in degree second year. So capital employed is nothing but asset minus liability. Asset minus liability. Second one, under assets, we have to consider all the assets except investment. That point I have been not mentioned there. That is except investment. Second point, calculate average capital employed. Average capital employed is nothing but capital employed minus half of the current year profit. Half of the current year profit is nothing but it is provision for tax, which is mentioned in balance sheet, old balance sheet. Whenever in the problem provision for tax is given to you, automatically you have to think that it is going to be considered under half of the current year profit. And the third point is calculate normal profit. Normal profit is equal to average capital employed into rate by 100. Average capital employed into rate by 100. If you're getting capital employed correct, the second point is average capital employed, automatically you'll get it. And with taking with capital, third step again, we have been considering the second point only. Average capital employed into rate by 100. Next, fourth step is calculate future maintainable profit. What is future maintainable profit? Future maintainable profit is average profits. Again, there are two methods. When the profits are differ, when the profits are increasing, depending upon that only you'll get that point, average profit minus partners remuneration. Minus partners remuneration. Next one is calculate super profit. After getting future maintainable profit answer, then only it comes to the super profit. Future maintainable profit minus normal profit. Then comes your goodwill. Goodwill last, anyhow, we have to do the goodwill chapter. Anyhow, we are doing goodwill chapter. So we'll come to know that what we have to calculate. That is nothing but goodwill is equal to super profit into number of years purchased. Super profit into number of years purchased. Now we are going to come to the third method. Under this method, we are going to study capitalization method. Capitalization method. Under capitalization method, from first to fifth, it is fully same, no change at all. Only we have to change the last steps. This method is similar to super profit method except last method. Because under last method, calculation of goodwill is nothing but, because here only from capital employed is same, second one is average capital employed is same, and the third one is normal profit is same, and the fourth one is future maintainable profit is same, then super profit is same, and the last step only you have to get changed. That is nothing but goodwill is equal to super profit divided by normal rate of return into 100. Super profit divided by normal rate of return into 100. Now, step number, up till now we have been studied with, I have been given the fully information of three methods. First one is average profit, second one is super profit method, and the third one is what? Capitalization method. Now we are going to study the fourth method, that is nothing but annuity method. This method is similar to that of super profit method, except that super profit, when arrived at, it is not multiply a figure representing a certain number of years. Purchase of super profit, the value of goodwill is calculated by finding the present worth of an annuity paying the super profit. So under annuity method, again the same methodology dear. From first to fifth, it is fully same. And the last method is only going to be changed. That is calculation of goodwill by annuity method. Whenever we are going to study about this annuity method, it is not at all applicable for this semester. Maybe it may be used for you for CA or CS courses, whatever you are doing it. But in this method, in this chapter, we are going to study only the three methods, that is super profit method. First one is average profit method, second one is super profit method, and third one is capitalization method. Today's topic, we have been closing here only. And from tomorrow onwards, there is a possibility that we may start with the problems. Thank you. Uma? Uma? Uma bete? बस हाँ चल देख कितना